You are about to embark on a journey that will transform your understanding of money, economy, and financial freedom. Bitcoin is not just a digital currency. It is a global revolution that challenges the status quo and promises to forever change the financial system worldwide. Over the next 7 hours, you will learn the complete history of Bitcoin, dive into conspiracy theories and understand what is real and what is myth, explore Bitcoin's advantages as a tool for financial freedom and security, understand the technology behind this revolution, and finally discover how to profit consistently from Bitcoin and other cryptocurrencies. And that's not all. By the end of this video, you'll gain access to an exclusive bonus, where we will analyze in detail the best strategies to maximize your Bitcoin earnings, including historical data and practical tips to protect your capital and build a secure retirement with cryptocurrencies. So, stay with me until the end, and don't forget to subscribe to the channel, like this video, and activate notifications so you won't miss any valuable content. Before we begin, I want you to pause and think. How many times have you heard about Bitcoin but felt like something was missing? Maybe you've heard stories of people becoming millionaires by investing in Bitcoin, or perhaps you've seen headlines about the volatility of the cryptocurrency market. But what really is Bitcoin? What is its true origin? Who created it? Why is it so important? These are the questions we are going to answer now. Get ready for a complete immersion into the world of Bitcoin. The story of Bitcoin begins in 2008, during one of the biggest global financial crises in history. Banks failed, markets collapsed, and millions of people around the world lost their savings. Trust in financial institutions was shaken, and many began to question the very structure of the economic system. It was in this context of chaos and distrust that a mysterious figure, using the pseudonym Satoshi Nakamoto, published a paper titled Bitcoin, a peer-to-peer electronic cash system. This paper described a new type of digital currency that didn't rely on banks, governments, or any intermediaries to function. This was the birth of Bitcoin. But who is Satoshi Nakamoto? This remains one of the greatest mysteries of the 21st century. Despite having created one of the most important innovations in modern history, Satoshi disappeared in 2011, and to this day, no one knows their true identity. Many theories have emerged over the years. Some believe Satoshi is a single person. Others believe he might be a group of programmers or even a secret institution. There are also theories suggesting that Satoshi could be a government or that Bitcoin was created by intelligence agencies to monitor financial transactions. But regardless of who Satoshi Nakamoto is, the fact is that they forever changed the course of history with the creation of Bitcoin. What makes Bitcoin so revolutionary? Unlike traditional currencies such as the dollar or the euro, Bitcoin is decentralized. This means that no central authority controls the issuance or use of Bitcoin. Instead, Bitcoin is managed by a global network of computers that use a technology called blockchain. The blockchain is a public ledger where every transaction made with Bitcoin is recorded and verified by this network of computers, known as miners. Each new block of transactions is added to the chain of previous blocks, forming the blockchain, which is immutable and transparent. This is the true innovation of Bitcoin, a decentralized, secure, and transparent financial system where transactions can be made directly between people without the need for intermediaries. But why is this important? To understand Bitcoin's impact, we need to understand the role of intermediaries in the traditional financial system. Banks, governments, and other financial institutions have the power to control the flow of money, charge fees, and in some cases, even block or freeze accounts. However, Bitcoin gives control of money back to the people. With Bitcoin, you can send and receive money from anywhere in the world, at any time, without relying on banks or governments. And best of all, your transactions are secure and immutable, thanks to blockchain technology. However, over the years, Bitcoin has become the center of various conspiracy theories. One of the most popular is the idea that Bitcoin was created by governments or global elites as a tool for financial control. Some believe Bitcoin is part of a grand plan to replace physical money with digital currencies that can be monitored and controlled by centralized systems. Others argue that Bitcoin is a direct response to this centralization, offering a decentralized and secure alternative for those who want to escape government control. Regardless of which theory you believe, the fact is that Bitcoin has the power to transform the financial system as we know it. Beyond conspiracy theories, it is essential to understand Bitcoin's role as a tool for freedom. In many countries around the world, Bitcoin is seen as a way to protect people's financial freedom. In places where the government tightly controls the flow of money or where inflation destroys the purchasing power of local currencies, Bitcoin offers a viable alternative. By using Bitcoin, people can protect their savings from inflation, transfer money without intermediaries, and have complete control over their assets. However, Bitcoin is not just a tool for freedom, it is also an excellent store of value. Unlike traditional currencies, which can be printed at will by governments, Bitcoin has a limited supply of 21 million units. This means that, over time, as demand for Bitcoin increases and supply remains fixed, the value of Bitcoin tends to rise. This makes it an excellent way to protect your wealth against inflation and the devaluation of fiat currencies. Now, let's talk about the technology behind Bitcoin. The blockchain, as we mentioned earlier, is the backbone of Bitcoin. But what exactly is the blockchain? Think of the blockchain as a digital ledger where all transactions ever made with Bitcoin are permanently and transparently recorded. Each new block of transactions is added to the chain of previous blocks, forming a continuous chain of records. What makes the blockchain so secure is the fact that it is distributed across a global network of computers. This means there is no single point of failure in the system, making it immune to fraud and attacks. Bitcoin mining is the process by which new transactions are verified and added to the blockchain. Miners are rewarded with new Bitcoins for their work. However, the mining process requires a significant amount of computational power and electricity, making mining competitive and difficult. In the early days, anyone with a computer could mine Bitcoin. Today, however, mining is dominated by large mining farms located in regions with cheap electricity. Now that you understand how Bitcoin works, why it is valuable, and the conspiracies and theories surrounding it, let's talk about how you can profit from Bitcoin. There are several ways to make money with Bitcoin, and the simplest is buying and holding. By purchasing Bitcoin now, you are positioning yourself for long-term growth as demand for Bitcoin increases and supply remains limited. Bitcoin has already proven to be one of the best performing assets of the last decade, and many believe it will continue to grow in the coming years. Another way to profit from Bitcoin is through mining. As mentioned earlier, miners are rewarded with new Bitcoins for verifying transactions on the blockchain. However, mining requires an initial investment in specialized hardware and electricity, and it may not be feasible for everyone. But there are other options, such as participating in mining pools or investing in Bitcoin mining companies. Besides mining, another way to make money with Bitcoin is through trading. The cryptocurrency market is known for its volatility, and many investors take advantage of these price swings to buy Bitcoin at low prices and sell when the price goes up. While trading can be profitable, it also involves risks, especially for inexperienced investors. The cryptocurrency market can change drastically within hours, so it's important to have a solid strategy and, above all, patience. One strategy that many traders use is technical analysis. Technical analysis involves studying price charts and historical patterns to try to predict future market movements. This technique can be useful but is not infallible. The cryptocurrency market, in particular, is influenced by a variety of external factors, such as government regulations, news, and even tweets from influential figures. Therefore, anyone who wants to trade Bitcoin should be prepared for volatility and have a solid risk management plan in place. If you don't have the time or interest to actively trade, another option is passive investing in Bitcoin. This involves buying small amounts of Bitcoin regularly, regardless of the price. This strategy is known as dollar cost averaging, DCA, and it's an effective way to smooth out market volatility. By investing consistently over time, you reduce the risk of buying Bitcoin at high prices and maximize your chances of making long-term profits. Now, let's dive into a fundamental question: why invest in Bitcoin? Bitcoin offers a number of advantages that make it one of the best assets for investors looking to diversify their portfolios and protect their wealth. First, as mentioned earlier, Bitcoin is decentralized and immune to government manipulation. This means that, Unlike fiat currencies such as the dollar or the euro, Bitcoin cannot be inflated by governments. In times of economic crisis, when central banks are printing massive amounts of money, Bitcoin offers a way to protect your wealth from inflation. Additionally, Bitcoin is extremely liquid. This means you can buy and sell Bitcoin at any time, anywhere in the world. It doesn't matter if you are in New York, Tokyo, or Sao Paulo. As long as you have internet access, you can transfer and trade Bitcoin in seconds. This is a huge advantage compared to traditional assets like real estate or gold, which can be difficult to sell quickly in an emergency. Another reason why Bitcoin is an excellent investment option is its growth potential. Although Bitcoin's price has experienced ups and downs in recent years, its long-term trajectory is upward. Many experts believe that Bitcoin is still in its early stages of adoption and that its value could increase significantly as more people and institutions adopt it. Large companies such as Tesla, Square, and PayPal are already investing in Bitcoin, and as more companies follow suit, demand for Bitcoin should continue to grow. Now, we are about to enter one of the most exciting parts of this video, where I will share with you an exclusive bonus: how to ensure consistent profits with Bitcoin while also protecting your capital. But before that, I want to remind you to subscribe to the channel, like this video, and activate notifications. By doing this, you will be helping to spread this information to more people and ensuring you don't miss any valuable content in the future. And share this video with friends and family. The more people learn about Bitcoin, the stronger we'll be as a community. Now, let's get to the much-awaited bonus. For many, the biggest challenge in investing in Bitcoin is knowing when to buy and when to sell. The cryptocurrency market is notoriously volatile, and it can be difficult to predict price movements. However, by studying Bitcoin's price history, it's possible to identify certain patterns and trends that can help you make more informed investment decisions. First, it's important to understand that Bitcoin follows a market cycle. These cycles typically last 3 to 4 years and are directly related to an event called halving. Halving is an event that occurs approximately every 4 years and cuts the reward given to Bitcoin miners in half. This reduces the supply of new Bitcoins on the market, which usually results in a price increase in the months following the halving. Historically, the periods following a halving are the best times to invest in Bitcoin, as this is when the market tends to enter a bullish phase. In addition to halving, another important factor to consider is the behavior of whales in the market. Whales are large investors who hold a significant amount of Bitcoin and have the power to move the market with their transactions. By monitoring whale behavior, you can gain insights into possible price movements. There are tools that allow you to track large Bitcoin transfers, and this can give you a competitive edge when deciding when to buy or sell. Another strategy many investors use is to diversify their holdings in cryptocurrencies. Although Bitcoin is the market leader, there are thousands of other cryptocurrencies, known as altcoins, that offer investment opportunities. Some popular altcoins include Ethereum, Litecoin, and Binance Coin. By diversifying your cryptocurrency portfolio, you reduce the risk of relying on a single asset and increase your chances of capturing gains in different areas of the market. Now that you have a deeper understanding of market cycles, halving, and diversification strategies, let's talk about how to maximize your profits with Bitcoin over time. One of the best ways to do this is by using the dollar cost averaging (DCA) strategy mentioned earlier. By buying small amounts of Bitcoin regularly, you avoid the risk of trying to time the market and instead build your position consistently over time. Additionally, it's important to have a clear exit strategy. Setting price targets to sell part of your Bitcoins is essential to ensure you are always profiting, even in volatile times. By setting these targets, you can protect your gains and avoid being caught off guard by sudden market drops. A good practice is to sell a small portion of your Bitcoins when the price reaches a certain value, ensuring you lock in profits over time. Now, for those looking to build a retirement plan with Bitcoin, there are some additional strategies you can consider. Many investors are using Bitcoin as part of their retirement plans since it offers a way to protect their wealth from inflation and global economic uncertainties. By investing in Bitcoin over the long term, you can build a store of value that, over decades, can provide financial security in retirement. One way to do this is by allocating a small percentage of your investments into Bitcoin each month, treating it as a long-term asset. While Bitcoin is volatile in the short term, its long-term appreciation history makes it an excellent option for those thinking about the future. Additionally, many experts recommend keeping between 1% and 5% of your total portfolio in Bitcoin, depending on your risk tolerance. This strategy allows you to participate in Bitcoin's growth while keeping most of your wealth in more traditional assets. Now that you've learned how Bitcoin works, its history, conspiracy theories, advantages, and investment strategies, it's time to reflect on what you'll do next. You can become an active participant in this financial revolution and start building your future with Bitcoin, or you can continue watching from the sidelines. The choice is yours. But if you've made it this far, I'm sure you're ready to take the next step and be part of this global transformation. Before we finish, I want to remind you to subscribe to the channel, like this video, and activate notifications. By doing this, you'll ensure that more people have access to this valuable information, and you'll help me continue bringing high-quality content to you. And don't forget to share this video with your friends and family. The more people understand the power of Bitcoin, the stronger our community will be. Now, to continue your journey into the world of cryptocurrencies, click on the next video, where we'll explore advanced investment strategies and how to diversify your portfolio to ensure maximum security and returns. Let's work together to build a safer and more prosperous financial future. See you in the next video.